Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Wednesday, the 3rd of June, 2020, about 5:40 p.m. Central Time. Melt up. You ever hear that term? I'm sure you did. You know what a meltdown is the market just feeds on itself and crashing. Well, a melt up's the opposite. It's when the market starts feeding on itself, froth hits the market. And what happened today is, in fact, what's been happening is the market, as we've gotten closer to the reopening and now that we're open of the United States economy, and I'm talking in terms of the COVID, and I'm talking that most big cities have reopened and industries moving along, getting back to normal, retail, restauranting. I can go on and on. You know what I'm getting at there. Europe is getting back to normal. Asia's gotten back to normal. So we're looking at what's going on. Now, not everywhere is great. Brazil's got massive problems, as you know. India, their case numbers keep soaring to the upside. So this COVID hasn't gone away. And I'm very fearful, as you should be, that when you see all these demonstrations over the past week that we've been looking at night in and night out, how many people aren't wearing masks? That's scary because each person that gets it transmits it, and they're pretty close together. These demonstrators are not 6 feet apart, nor are the police without masks, and I see plenty of that. So, something to think about. But a melt-up? Absolutely. Where's the investor? They think they're missing the move, so they're buying everything. Is the rotation at work that I've talked about? It is. You're still seeing that the biotech, which was running on weeks ago, is sort of stalling as the industrials are moving back up, as the consumer spending's moving up, the different sectors within there. As we take a look at XLK, the technology sector, beautiful update today, no question about that. New high for the move, filled the gap up here. Now the question is the market going to be able to make it to new highs, or is it going to stall out against it? When we add to this chart moving averages, the crossover of bullishness began right here when the 18 got over the 100. You have not been back under that 18-day average of closes. The pattern reset itself the other day when you had higher lows, higher highs, and the market has moved up since. So the bullishness is in here. What about the resistance? You're right there. The 100.06 levels, the upper Bollinger Band. Today's high, 99.95. I'll stick with what I teach. The first challenge of a Bollinger Band is often where the pros come out of the market. They really do some liquidation. Gives them buying power if they want to keep owning it on the break. Where's the momentum? It's still embedded. So my number one momentum indicator, my number one indicator is when a slow stochastic embeds, bullish or bearish. Until it's lost, you're trying to stay with the trend of the market and you're looking for places to come in. If you get my SPDR ETF video, I show you another set of moving averages, which is where I think the pros buy. So you might want to take a look at that. If you're looking at SMH, this replicates the U.S. Semiconductor 25 index, an attempt at an upside breakout. Now, what's the difference between hitting the upper Bollinger Band and an upside breakout? The upside breakout occurs ideally with the market getting a close over the upper Bollinger Band, which only happens 5% of the time, and the very next session. Another close over the band, again higher close, and in the top part of the day's range as well. Not midpoint, the very top of the range. Haven't gotten that yet. We'll look to see if we'll get it. In the XLI, as you got up to this number, today's high was 71.57. The upper Bollinger Band's literally right there at 71.59 with an embedded reading. I think pros are taking some money off the table here. What about in the energy sector? Same thing. You hit the combination today of the 100-day average in the upper Bollinger Band. You didn't hit that yesterday. This is the first day of doing it. So that's what I think is going to happen here. Am I bearish? I'm not bearish. But there are spots you take money off the table. That doesn't mean you can't play with your money into other sectors, other markets. That's up to you. What about this market? Did we hit the upper Bollinger Band yesterday? No. Today the market got as high as, 237.47. And that's still about 50 cents shy of the upper band. So it's still far enough away where the pros might be hanging in there. Not so in the emerging markets. We talked yesterday that the 200-day average might be the next resistance point. I think you had your breakouts right here, and you've carried up there. So this market, The money's just looking to plow in around the world. That's why I'm calling it a melt-up. It doesn't matter earnings. It doesn't matter anything else. You're playing that the world's getting back to work and everything else will come back into play. You don't have to agree with me. I get it. But I also get what I think's happening. In gold, well, if they're betting on the stock market big, they're not too worried about the gold market, so the gold fell down. What do you do the first time you hit a lower Bollinger Band if you're a pro trader? I think you're covering shorts. Your algorithm's doing it, something's doing it, because only 95% of the time will you stay in that. I'm laughing, 95%, and only 5% will you stay out of the band. So are you playing that, oh, it's going to keep going? Typically you don't. In the gold miners, what would you have done here? Now, we came in yesterday and I said, you've reestablished the bear trend. I said that you got lower highs, lower lows, until today's high is taken out today, which is Wednesday or Thursday, which obviously, this isn't today, this is yesterday. Look for lower prices. You hit the lower Bollinger Band. What do? You hit it. Out you go. That's simple. The trade oversold to the downside. We'll see what happens next. TLT, an attempt at breaking out to the downside. You need another day like this. If you get it, look for the 100-day average. But more important, what does this mean if interest rates start moving up? We have the Fed next week on Wednesday telling us what our monetary policy is going to be. Now, I think it's too soon that they're going to turn on any form of tightening. Don't get me wrong, I don't expect that and I don't think the market does. But the marketplace is creating higher yields, and that's what I always watch. When I look at FXII, you have the European Central Bank announcement tomorrow as to what the monetary policy is, both in a statement and a press conference by Ms. Lagarde. We'll see. This market is broken out, continues to move to the upside, got the embedded reading. The pros might have taken money off, but it's still running on it, and that doesn't mean they're out. This is a runaway. This is a market that has made a statement that this is a base to work to higher prices. So you put that all together, you try to come up with game plans, and that's what trading's about. I'm not an investor. What I offer you is trade ideas. I do it, a lot of it, through my market research too. For those of you that like to watch the futures, because it definitely influence the ETFs. If you think not, it's not the ETF that influences the future. Futures influence this. Futures trade 23 hours a day, Monday, if you think about it, through Thursday. You only have your, what? You got your 6-7 hours a day of ETF trading, and then they got to see what the futures did overnight. I write about it. If you haven't seen a trial to what I write and how I do it, it's simple. It's headline news, it's captions, it's paragraphs on what I think is going to impact the market, and I trade ideas. You can get it by getting a free trial by going to our website at www.iraepstein.com. You can also click up here. That'll take you right there as well. I'm Ira. You have a great day, and I'll see you all tomorrow.